While our next guest says the economy's been resilient, he thinks the markets will struggle to do well with the headwinds underway. Here to lay out some of those challenges, including the labor strikes and this looming shutdown, Evercore founder and senior chairman Roger Altman. Roger, good morning. Good to have you.
Hey, Carl. Nice to see you.
Eunice told us about China. We're watching the strikes. We're watching potentially for this shutdown. Are the markets incapable of handling all of these boiling pots?
Well, it's hard to be sure about that, but let's step back a minute. The word I would use to describe the U.S. economy this year, as you said, has been resilient. Through the first 9 months, it's just performed better, for example, in terms of growth, than most people expected at the beginning of the year or partway through the year. Real growth for the second quarter was 2.4%. Many people think the figure for this current quarter, just about to end, will be even higher than that. And that's remarkable this late in the economic recovery. After all, it started 3 years ago. But now, as Chairman Powell said last week, there have emerged a series of headwinds. You've been talking about them at length this morning. Oil prices, interest rates, resumption of student loan payments, and then some shorter-term ones in terms of the UAW strike and so forth. And the prospect of a shutdown, of course, those 5. And it just seems to me, until there's more clarity on these, especially the short-term ones, would be hard for markets to move ahead. And they'll probably put downward pressure on the U.S. economy so that the fourth quarter, the one we're about to start, probably going to come in much lower than the last couple, maybe around 1%. Not a little too soon to tell, but lower.
Are there policy responses to any of these troubles, Roger? I mean, what more can we spend out of the SPR? Can Biden do anything of note in Detroit this week?
Well, in terms of oil prices, Carl, I'm sure that they're going to work hard, perhaps in the context of these negotiations between Saudi Arabia and Israel over a diplomatic agreement and resumption of diplomatic relations, to see if there could be some increased, at least temporarily increased supplies, because after all, the Saudis are asking the United States for security guarantees as part of that deal if the deal were to happen. Now, whether that's possible in terms of some relief on supplies, I really don't know, but I'm sure that the administration is working some angle of that. But look, the main policy that's operating right now from a federal point of view, of course, is monetary policy. And we've all seen that the message from the Fed is higher for much longer. And we're seeing, a 16-year high in the 10-year, 20-plus year highs in mortgage rates and so forth. And it's hard for the economy to continue this level of resilience in the face of that.